Welcome traders, David Dubay of Polaris Trading Group. In affiliation with Infinity Futures, this is the weekly review and preview video for May 8th through the 12th. Okay, industry regulations require that I mentioned NFA Compliance Rule 2-29, which simply states that hypothetical performance results have many inherent limitations. And trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. Past performance is not indicative of future results. So for some of you that have just recently tuned into the weekly videos that we've begun producing, just want to give you a quick background about myself. I am a 30-plus year trading veteran of investment banks and hedge funds, and I'm currently an independent proprietary trader and educator at Polaris Trading Group. My background has spanned various firms such as Shearson Lehman Brothers, United Bank of Switzerland, UBS, and a number of high-frequency hedge funds. During that tenure, I was a market maker and listed in NASDAQ stocks, traded index futures and derivatives, and various positions through the portfolio risk management area. All right, so with that, let's get to the review for this past week. All right, so the table that you're seeing here is typically where we begin, and this is what's called our performance chart of the S&P sector ETFs, and this is available through stockcharts.com, and which is a very good application. So this gives you a quick overview of where the sectors, where the activity was, and this will help give us an idea of where the money's been flowing recently and where it may continue to flow. So this past week was somewhat of a mixed week overall on the indexes themselves, and we'll get to the charts to discuss that. Of course, the big news this past week was the drop-off in the energy and the crude oil prices, right? And that was the big underperformer for the week. But on balance, but between the cyclicals, technology here on the left-hand side, that had a positive week. Cyclicals had a marginal weak week. The materials, okay, that should be no surprise. There's copper, gold, some of the base metals that comprise, of course, energies comprise the materials sector. So that's no surprise that that's down in sympathy with the energy area. Staples had a minor week. We had a little uptick in healthcare and utilities, of course, which is a defensive sector. That was mixed. And financials, although had a couple good spurts throughout the week, was pretty much mixed at the end of the week. All right, so that is a look at this past week, and let's take a look at this a little bit more graphically. All right, so first off, I just want to bring in the profile of crude oil over the past, let's say, month or so. And what I find comical is you're hearing some of the pundits on TV saying that there was a technical breakdown at the 45 level. And the reason why I find that comical is because when they finally report on something such as this, they're really late to the whole party. Okay, really, from my perspective, on a price basis, the technical breakdown actually occurred up near the 52 area, where the price broke down here. This was kind of the shot across the bow. This was back on April 18th, and then since then. All right, the market has been trending in a downward condition, and then finally the technical break, and we've highlighted this on many occasions within our trading room at the 48 level. So really, the initial shot across the bow here was up at 52, and the technical break, as far as we could see it, really was the follow-through break at the 48s. All right, and then at this point, the longs here just pretty much got forced out. Margin calls hit. There was I guess a couple news items or on the various social medias and so forth that maybe a couple of the large macro energy type funds were under pressure to sell. You typically get those type of reports when the markets like this make a pretty big move, so that's not uncommon to see. But the fact of the matter is, supplies out there fundamentally continue to kind of dog price from going higher. And my recommendation overall to anybody that trades is follow the price action first. All right, don't look at or pay too much attention to the various reports that come out in the media. Just really look at price action. That's where everybody's making their commitments. Okay, whether it's crude oil or whether it's something else, follow the price, right? And that will serve you the best. All right. So again, no surprise there. Possibly a bounce after the flush out. We don't know if necessarily this is the low down at the 43s, but if it is, the expectation then would be some sort of a bounce back up to test the breakdown near the 48s. That would be the initial target to come back up to, and then that would still continue on with the current downtrend. All right, that crosses to around the 48 level. So look at 48s if there's a rally this week. Look at 48s, possible retest of that extreme low down near with the 43 handle on it, and we'll see what happens. But again, crude oil is a very volatile name, only for those that have a strong stomach and a decent size trading account. All right, let's get to the indexes here. So we'll start with the S&P 500. Now, if you've been following the videos recently, you can take a look at this. Is the video chart that we had pretty much last week, and I haven't really made any changes to it aside from a couple additions. But the main factor here is from this past week, the market pretty much held within the boundaries of the prior week's value zone. That was the 2378s up to the 2392s. And the market just kind of languished in there throughout the entire week. And again, as we saw with the sector analysis chart, the market ended up pretty much overall in a mixed kind of bag throughout the course of the week. So there really was not any definitive direction to it. We had the Fed announcement on interest rates that they were holding things steady for the time being, but are leaning to the upside. And so we have a new yell, and that is the first trade following the announcement at 2 o'clock on the Fed day is 2381. So that's the new yell. So mark your charts accordingly. The old yeller, as we're calling it, is down at 2372. So if you recall, 2372 has been a floor recently. When prices came down and tested that, prices bounced up, and that became the new floor. This past week, price tested the low end of last week's, or the week before, value zone low, 78.76, found support, buying response in that area, and then held. Now going into Friday, all right, let's zoom in a little bit here. Going into Friday and Friday, we opine that the bullish scenario would mean if price converted the 2386.88 zone to upper support, then the initial objective would be to push through the 2392s. If that converts, setting up a further push to the upside, targeting the 2400 handle. So on Friday, and again, this past week, the volatility has been extremely low. That we actually had very little trade opportunity, standard trade setups in our core strategy of premiums and discounts, but there was some opportunities throughout the course of the week. It was a very, very muted week though. That said though, the overall structure did hold. As you can see, price traded quite a bit around that midpoint area at the 2386 area. On Friday, had an initial opening higher, okay, from the prior day, Thursday. Traded down, tested the 86s, again languished there most of the day with a slow creeping upwards, and then the real move didn't actually come, guys, till about the last 20 minutes of the session. All right, where pretty much everybody had packed up for the week. all right, and looking into the weekend. And then we got a bit of an explosive move in M and N period, which is right up into the close area. So but notice where it broke out from, 23.92. So there was a little test in K and L period, and then ultimately broke out through that, converted it, and then vaulted higher. Again, this was very late in the session on Friday, and there really wasn't a whole lot to be able to do to get on board that, other than chase after late in the session. So certainly I think there were a number of people wrong-footed on that, and I think there was just a matter of a squeeze up into the close. Okay, so let's consider what we'll be looking for this coming week. All right, since now we do have a clearing conversion of the 23.92 upper value zone of, let's just call it, the past 2 weeks. All right, that becomes a significant upside decision to push higher. Now, there is a number of large options contracts striked at around the 2400, so that's something that is going to have to be contended with, all right, on the upcoming week. So we got some big option strike levels up there. Certainly, the market is still in a bullish formation. Nasdaq broke out to a new all-time high again this past week. So all in all, the market is in pretty good shape. Bulls are definitely in control after a couple attempts on the bears to break through the low part of the range from last week. Failure to do so, right, set up this spring that we call it, and the price has finally vaulted higher again late in the session on Friday. So coming into next week, we're going to be looking for any pullbacks to the 92 area if that develops, to find renewed buying interest. And we are entering in on cycle day 2 on Monday. And as you can see here, price has already reached the initial cycle day 3 rally target at the 97s. There is a subsequent one up here at the 2405 roughly. So that's going to be a target for the bulls to push up. The cycle range high for Monday will be about the 2401s, as you can see there. So all in all, we'll be looking to buy pullbacks, staying with the current dynamics here in price. Should price pull back down and failure to find any renewed buyers around the 23.92 handle, that may push price back down into the range, but that's not the early expectation anyways. We'll be looking to buy pullbacks. Just again, guys, stay with the overall context, and you'll be fine. All right, let's take a quick look at the economic calendar for next. All right, so taking a look to see what is important on the economic calendar going forward for this upcoming week. Actually, over here to the left, Macron wins the French presidential election that did come out here late here on Sunday. So the market should take that in stride. He was favored to win over Le Pen, so that should not be too much of an issue with the markets. We got the JOLTS report on Tuesday. Nothing further there. A couple of the Fed governors speaking. Wednesday, don't see much there either. We had weekly jobless claims and PPI coming in. Of course, the EIA petroleum report number again is on Wednesday, and consumer price and retail sales. So a relatively light upcoming calendar. I think the market's just going to be trading more, continue in that bullish fashion, and that's we're gonna stay focused on that. If things, of course, if things reverse during the week at all, we'll be taking our cues from price action, not from any major announcements. Okay. All right, and so for those of you that have recently tuned in and have not visited with us, I would like to certainly offer you a special free offer trial to come in, visit with us at PolarisTradingGroup.com/free-trial, as you can see on your screen there. Come visit, take a look at what we do on a daily basis. We put out a daily trade strategy each day. We focus and hone in on the specific items for the session. and you can certainly take a look at what we do on a daily basis. Okay, and if you any other questions, you can feel free to contact me at david@polarisTradingGroup.com. That's the preferable way of reaching me, or you can contact Patrick Zielbauer or your Infinity Futures representative at the address shown below there. All right, that's it, everybody. Have a great weekend. We'll see you on Monday, and let's make it a profitable week. Thanks very much.